Wake up, Crypto Nation, because the Federal Reserve is officially done playing games with your bags. Tomorrow, the Fed decides our fate, and Chairman Kevin Warsh has already told the industry, if you collapse, do not expect a central bank bailout. We are exactly 50% down from our massive $126,000 peak last year, and the survival of the fittest era has officially begun. It is Monday, July 27th, 2026, and I am your host. Today's market is a powder keg of quantum computing threats, regulatory crackdowns, and a desperate fight to hold $65,000. You need to watch this until the end, because Washington is rewriting the rules of the game right now, and your portfolio is directly in the crosshairs. All right, let's get into the headlines you actually need to care about. Here are the top 10 breaking stories dominating the U.S. market this morning. Number 1. Fed Chair Warsh says no bailouts for crypto. Federal Reserve Chairman Kevin Warsh has shattered the industry's illusion of a hidden safety net, bluntly stating at a congressional hearing that the central bank will not intervene if stablecoins or crypto markets face a run. With tomorrow's critical FOMC meeting looming, this risk-clearing signal is forcing U.S. investors to radically adjust their leverage. Sentiment: cautious, bearish. Number 2. Bitcoin struggles in the shadow of its $126,000 peak. We are currently trading near $65,000, which is down nearly 50% from the massive $126,000 all-time high set back in October 2025. Market confidence remains incredibly fragile, with U.S. spot ETFs still reeling from their largest single-month net outflow ever recorded in June. Sentiment: bearish. Number 3. The Clarity Act pushes forward in Washington. Lawmakers on Capitol Hill are making aggressive legislative progress on the long-awaited Clarity Act. This framework could finally draw strict boundaries around what constitutes a digital security versus a commodity, heavily impacting how U.S. institutions can legally allocate funds moving forward. Sentiment: cautious optimism. Number 4. Root data adds Bitmart to the 2026 crypto graveyard. The crypto winter of 2026 is claiming major casualties as data tracker Root Data officially added Bitmart to its registry of dead crypto projects. It joins the likes of BitMEX and AscendX in a sobering reminder that not every platform is surviving the current regulatory and liquidity squeeze. Sentiment: bearish. Number 5. Coinbase warns of a $1 trillion quantum threat. Coinbase has issued a stark warning that over 7 million idle Bitcoin are highly vulnerable to emerging quantum computing threats. This is sparking a fierce debate among U.S. miners and core developers on whether the notoriously rigid Bitcoin network needs to execute a hard fork to upgrade its cryptography. Sentiment: neutral, anxious. Number 6. AI bubble threatens to drag down crypto prices. Top analysts, including BitMEX's former co-founder, are sounding the alarm that an impending correction in the artificial intelligence stock bubble could directly drag Bitcoin lower. With Bitcoin's correlation to the Nasdaq remaining stubbornly high, U.S. investors are being forced to watch tech earnings just as closely as on-chain data. Sentiment: bearish. Number 7. Fear and Greed Index stuck in fear territory. Despite a slight global market cap bump of 2.7% to $2.3 trillion over the last 24 hours, the Crypto Fear and Greed Index is sitting at a dismal 30. Retail and institutional investors alike are highly risk-averse, haunted by sticky inflation and the looming threat of higher-for-longer interest rates. Sentiment: bearish. Number 8. Small miners crushed by post-halving economics. The squeeze is on for small-scale U.S. Bitcoin miners who are struggling to maintain profitability following the combination of the most recent network halving and the plunge from last year's record highs. We are seeing a major capitulation phase where corporate giants are eating up the smaller operations that can no longer pay the electric bill. Sentiment: transitional. Number 9. U.S. states and the EU tighten the noose on exchanges. A coordinated regulatory squeeze is underway as several U.S. states and the European Union push forward with ultra-strict licensing requirements for exchanges and custody services. While designed to protect retail investors, market makers are warning this is already dampening institutional participation and fragmenting global liquidity in the short term. Sentiment? Cautious. And last, number 10, Ethereum outpaces BTC despite market gloom. Ethereum is the surprising hero of the morning, up over 4% and breaking past $1,950, while Bitcoin fights for stability. The surge is largely attributed to renewed developer activity and a rotation of capital flowing back into core DeFi lending protocols that serve as real-world utility. Sentiment? Bullish. And that is your market post for July 27, 2026. The overarching theme today is survival. The era of central bank bailouts and pure speculative hype is officially dead. We are now operating in a market that demands real utility, unshakable regulatory compliance, and bulletproof security. Tomorrow's Federal Reserve rate decision could send us flying or send us crashing, so you need to be prepared. If this breakdown gave you the edge you need today, smash that like button, hit subscribe, and make sure you turn on notifications so you never miss a beat. I want to hear from you. Are you buying this Ethereum pump, or are you sitting in stablecoins waiting for Chairman Warsh to speak? Drop your thoughts in the comments below. Until tomorrow, manage your risk, stay sharp, and keep building your stack. I'll see you on the next one.